So, have the markets finally turned around, or are we headed for a recession? Or could both possibly be true? Hi, I'm Jamie French with Advent Partners, and I'm hoping to touch on a few of these topics today in a brief market update. I want to start by talking about how the markets have done year to date. We've been off to a good start through January, so that's exciting, certainly after what we experienced in 2022. The S&P 500 is down just under 8% after losing 19% last year. And the international markets or international stocks are up around 9% as well. And the bond market, which had double-digit losses last year, is up by 3% as well. So a good start to the year, and hopefully we'll see continued recovery of some of the losses we experienced last year. From an economic standpoint, the U.S. added about 517,000 jobs in the month of January, despite what we're reading in the headlines about massive layoffs in some very public companies. The forecast for those jobs was about 188,000. So way over the estimates for the month of January. Unemployment has dropped to 3.4%, which is the lowest rate in the last 50 years. So some good economic news there. And lastly, the Fed last week announced they were going to raise interest rates by 0.25%. And the market took that as good news because up to this point, the Fed had been doing increases of 0.5% or more. And so it appears there may be signs of that slowing as inflation starts to ease. So the big thought on everyone's mind is, are we in a recession? Are we headed for a recession? And I think we can safely say that we're not in a recession now. Could there be one imminent? Well, there probably is a good chance of us heading towards a recession, but it may not be as imminent as we once thought. I want to share with you a chart. The National Bureau of Economic Research, or NBER, is what ultimately defines whether we are in a recession or not. And they look at 6 different factors, which you can see on the screen here. And I just want to point out that in the last 6 months, 4 out of those 6 have actually had a positive change. And when you look at this heat map, you can see at the top, we see a lot of green, at the bottom, not so good. So the truth is, we don't know if we're headed for a recession or when that will be. And we don't know what impact that will have on the market. But what we do know is that what ultimately works in the long term is sticking to a disciplined strategy and trying to make good decisions in the midst of emotional and scary markets. And certainly we would expect that in the remainder of this year, it will probably continue to be volatile, and we want to be disciplined in our management of the investments as we go through that. In addition, you can also positively impact your financial picture, not just by managing investments well, but also taking advantage of other planning strategies, specifically in the area of taxes. At the end of last year, Congress passed Secure Act 2.0. And while I'm not going to go into a lot of detail about that today, suffice it to say that there were some significant changes to rules around RMDs, or required minimum distributions. And there were changes to rules around QCDs, or qualified charitable distributions, and other changes related to 529s and Roth IRAs. So certainly, in addition to making sure that you're investing wisely and making good decisions there, we would encourage you to look at how that legislation impacts you and what strategies you might be able to pursue to help further your financial resources. If we can help with any of that, please give us a call. I hope this was helpful, and have a great day and a great week.